profit and loss adjustment account, it is to be resolved. Okay. After that, it is related to the adjusting and the closing entries. It is related to the adjusting and the closing entries. See, whenever the accounting year ends, all the ledger balances are balanced. Whatsoever the ledger balances are there, accounts are there, those all are balanced. After that, you prepare the trial balance, and from the trial balance we do prepare the final accounts, right? And when we do prepare the trading account, profit and loss account, all the incomes, all the expenses are to be considered in full for that particular accounting period. For that particular accounting period. And it may be the case that you have already paid the expenses, you have already incurred the expenses, but you have not paid. Like you have set aside the money, but you have not paid. Let's say salaries outstanding. Let's say salaries outstanding are there, right? Now, salaries outstanding, that is yet to be paid, but not yet paid. Let's say case in the month of April, month of March, electricity bill, right? Now you know that the electricity bill is going to be there, but you have not paid, right? So that is what that is related to. Those entries are to be adjusted. Those particular entries are to be adjusted. Okay, so simply we can say that the adjusting entries are such journal entries which are passed at the end of the accounting period, so that we can comply with what concept? We can comply with the accrual accounting concept. Okay, so there are two principles. One is related to we need to comply with accrual basis of accounting, and second one it's related to so as to follow the matching concept. I told you in the very first two videos that the matching is to be done, that the current year expenses, incomes should be matching to the current accounting period only, right? Not related to that. We cannot be taking it further. Okay. So adjustment entry we talk about, it could be related to the outstanding expenses, that expenses that have incurred but have not been paid so far. It could be the case, right? And let's say case expense entry is there. And it could also be related to the prepaid expenses, like you have already paid the rent in advance. You have already paid the rent in advance. For that particular scenario, also the outstanding adjusting entries to be passed. It could be related to the accrued income, like income which you have earned but you have not received. Interest accrued, it could be there, that is to be considered, right? Income that you have received in advance, that is to be showcased an expense, right? So all those are to be explained, and for that particular purpose the adjusting entries are to be passed. Okay, so such entries will be said to be the adjusting entries, and these are for what? These are for accrued revenue, like for receivables, accrued expenses which were payables. It could be related to prepaid expenses or for the prepaid revenue. Okay, so accrued revenue is like that is receivable, that is due but you have not received, due but not received. Accrued expenses, payable but you have not paid. Prepaid expenses, already paid but not incurred. Prepaid revenue, prepaid revenue is what? You have received the advance but you have not given the service so far, right? So that's the case, and those are to be adjusted, and the entries so passed are called to be adjusting entries. Is that clear? Is this point clear to you? Okay. After that, it's related to the closing entries. It's related to the closing entries. Now, what do you mean by closing entries? Now, closing entries are also passed at the end of the accounting period. But why those are passed? So as to close the account. Name suggests itself. We do pass the closing entry to close the accounts. To close accounts. I already told you. We need to close the nominal accounts. We need to transfer the balances to the profit and loss account, to the trading account at the end of the accounting period, so as to ascertain the gross profit, so as to ascertain the net profit, right? That is to be done. Income and expense accounts are to be reset for the next accounting period. That is what? That is related to the closing entries. That is related to the closing entries. Okay, so the balances whatsoever are there are to be transferred, and that is said to be the closing entries. Okay, now let's pay attention to what these questions will be solving. Such these questions over here. So the question is very much simple. I want you all to participate in these questions and so as to answer. Please do mention the question number along with it while answering. So the question says, a mistake has been committed in the balancing of the ledger account. What type of error it is? So if you have committed a mistake in balancing of the ledger account, what type of error it is? It will be the error of omission, error of commission, error of principal, or the compensating error. The answer would be error of commission. If you have posted the wrong balances on the wrong side, wrong account, right? Or balancing is not done correctly, it's related to what? It's related to the error of commission. So option B will be the correct answer here. Now, let's move further. Question number 2. The total of salary account has been undercast and the total of the carriage account has been overcast for a similar amount. This is what? Error of omission, commission, principal, compensating error. What type of error it would be? So we have undercast the salary account, but we have overcast the carriage account. Now, those are not related to single entry, first of all, right? These are two different entries, and one error is going to nullify the effect of the other error. So what type it would be? Error of commission, omission, principal, or the compensating error? I want you all to participate and so as to answer the questions. So what will be the answer here? It is compensating error. How come? See, salary account is undercasted. Total is less than the actual, and casted. Total is more than actual. Let's case that the salary account was undercasted by 25,000 and carriage account was overcast by 25,000. Now this under to nullify this particular effect, that is basically the compensating error. So answer is option D. That is compensating error. Very right. Shri Krishna has answered here, and that's correct answer. It's option D. That is compensating error. Now let's move to the next question. Question number 3. It says the debit side of trial balance of the firm shows a balance of rupees 1,85,500. The amount of depreciation amounting to rupees 2,500 has not been provided in the books. The debit balance of the trial balance, if the amount is provided, would be what? So we are to tell the balances here. So pay attention toward the basics, right? So just pay attention toward the things over here. So the debit side of the balance, trial balance is what? It is given. In the case of trial balance, we are given to be have the debit side, and that is given to be 1,85,500. 1,85,500, and depreciation is not provided. Depreciation is not provided, amounting 2,500. This is not provided. You have not provided with the depreciation. Okay. So if we look at the depreciation entry, what would be the accounting treatment for this depreciation entry? Entry must have been something like we are to debit the depreciation account, because depreciation is a income or expense. Depreciation is an income or expense. Kindly let me know. It's an expense. What type of expense? Non-cash expense. So depreciation, if we look at the accounting entry, the accounting entry must have been debit the depreciation account. Depreciation account is to be debited, and which account is to be credited? Asset account, because it is charged on the asset. So asset account would be credited, right? So that should have been the journal entry. So debit balance would be accountable for the debit side over there. So we are to add it to the debit side. We have to add it to the debit side, because it is clearly said in the question that the amount of depreciation has not been provided in the books. Has not been provided. It means we have not casted it in the books. We have not posted it in the books. So that was posted 2,500 on the debit side. All right. So we are to add it up, and when we'll be adding it up, it will be 1,88,000. So answer will be option C. Option C would be the correct answer. Clear so far? Now, let's move toward the question number 4. In the gross trial balance system, in the gross trial balance system, the gross balance in the ledger account is taken. Only the total of the debit side is taken. Only the total of the credit side is taken. Total of credit side and debit side is taken. Which one would be the correct answer? There are two types of the trial balance. There are two types of the trial balance. One, it is a gross trial balance system. Other one, it is a net trial balance system. Gross trial balance system and the net trial balance system. Which one is to be taken care? It is gross trial balance system. Very right. Option D will be the right answer. So Sri Krishna has answered here, and that's very correct. Total of the credit side and the total of the debit side is to be taken. No balancing is to be done in case of individual accounts. Whereas in the case of the net trial balance system, the balancing is to be done and net balance is to be taken to the trial balance. Right? Now, let's move ahead toward the question number 5. Question number 5. In the books of the firm, the total of the debit side in the trial balance is less than the credit side. So the total of the debit side is less than the total of the credit side. One of the few entries indicated that the total of the sales return is short by 3,200. How it will be rectified? How it is going to be rectified? Question is given here. It says that one of the few entries indicated what? The entries indicated that the total of the sales return is short by 3,200. Now sale is what? Sales account is what? If we look at the sales account is an income, considered to be an income, right? But sales return would be related to what? If we're talking about the sales return, it's a expense. When I'm talking about the sales return, it's an expense, right? Because both of the accounts are the nominal accounts. Sales return is a nominal account. Sales is a nominal account. If it would have been the sales account, it should be credited. But it's about the sales return account. It should be debited. Okay. So the rectification entry would be what? Because we have undercasted it. We have undercasted the entry. It is given over here, na, that the indicated that the total of the sales return is short by 3,200. That we were to post rupees 3,200 of the sales return, but we have not posted, right? So the sales return account is to be debited. Sales return account is to be debited, right? And further, so as to solve it, because we are going to prepare the trial balance, what we'll be doing? We will be crediting it into the suspense account. We will be crediting it to the suspense account till we don't get to what particular account it is to be credited, right? So it will be the solution. So let's have a look at the options. Sales return account will be credited by return by 32,000 or 3,200. No, it is not to be credited because it is short and we know that it's an expense, right? So it is to be debited. So it is to be debited. Just look at the concept. So if it is short, if you have to increase it, if it's an expense account, if you want to increase it, you have to debit. If it would have been an income, like let's say if it was sales account, then you must have credited, right? So why we debited it? Because it's an expense account. So we are going to debit the sales return account and we'll be crediting it to the suspense account. Is it clear? Now, let's move to the next question. It says one side error can be rectified by passing a journal entry, correcting the posting, deleting the entry, any of the above. How the one side error can be rectified. See, one sided error affects only the one side, right? Which is causing the disagreement in the trial balance. And you can simply be passing the single one entry into the journal entry using the suspense account, or by passing a journal entry, correcting the posting. How it can be done? Do answer at the earliest. Very easy question. Two types of errors are there, one-sided error or the two-sided error. Definitely, you can be deleting the wrong entry also, you can be correcting the posting also, you can be passing a journal entry also. Any of the above can be done. Any of the following can be done. So option D will be the correct answer. Okay. Now, question number 7. If there is an error that is detected after preparation of the trial balance, it can be removed in the manner by doing what? After the preparation of trial balance, if you're doing so, an error is detected, how you'll be resolving it? By cutting the entry, by journal entry to debit the relevant account through a temporary account called suspense account, in any of the manner above. If you've already prepared the trial balance, in that scenario, we are to open the suspense account. We will be working through the suspense account. Yes or no? I already told you, if the final accounts have been prepared, then the profit and loss adjustment account and the balances will be transferred to the capital account. But if the trial balance is prepared, then will be, when we can rectify the entries through what? We can be rectifying the entries through what? We can rectify the entries through opening the suspense account. Okay. We'll be passing the journal entry, but the temporary account is opened for it. That will be the case. This is not the scenario like we will be debiting the relevant account only. No, that's not the case. So the answer is option C. The relevant answer is option C here. Now, let's move further. Question number 8. Which of the following does not match in the context of trial balance? When gross trial balance is prepared, the net balance of each account is taken. We have to look at the fact which does not match. Does not match. See, in the case of the gross trial balance, when the gross trial balance is prepared, the net balance of each account is taken. Is it true? The net balance is not taken. The total of debit and credit is taken. So this is not correct, right? And that is not matching. So definitely this should be the answer. Second statement. Debit balance of ledger account is shown on credit side of the trial balance. Is it the case that the debit side is showcased on the credit side? Is there any rule related to it? No, that's not correct. Debit side is not showcased. It says what? Debit balance of the ledger account. If your ledger is having the debit balance, it is showcased on the credit side. No, that's not true. And it is said incorrect. So it's not going to be the answer. Because we are to answer which one does not match. Which one does not match. Third one. Overdraft is shown on credit side of the trial balance. If you are having overdraft, that will be showcased on the trial credit side. Is it the case if you're having the bank balance? If you're having the bank balance, in that scenario, what will be the balance, account balance? It will be in debit. Yes, if the bank balance is in debit, it means you are having the current account. And if it is having the credit balance, it will be showcasing that you are having overdraft account. Simple as that. However, if you are having the money in your bank account, then it will be showcasing a debit balance. Okay. But if you are not having money, you are having overdraft, it will be showcasing the credit balance. Now, if overdraft is to be there, in that scenario, it will be on the credit side of the trial balance, and it is correct. It is correctly matched. So it is also not our answer. Ledger balances are carried to the trial balance. Exactly. Ledger balances are to be carried to the trial balance. This is also matched correctly. So this is also not answer. So our answer is option A. Our answer is option A. Right? The next one. Which of the following statements is not correct? Which of the following statement is not correct? We need to answer. So the option A, it says that in preparation of the net trial balance, ledger account balances are extracted. See, in case of the net trial balance, ledger account balances are extracted. Is it true? We have to tell which one is not correct. In preparation of net trial balance, ledger account balances are extracted. Yes, absolutely true. So this is correct. Fixed deposit with the bank will be shown on the credit side of the trial balance. No. If you're having fixed deposit, you are having money in the bank, and that will be showcasing a debit balance. So this is not correct. Purchases are shown on the debit side of the trial balance. Correct. Because purchase account is a nominal account, it's an expense. So it will be on the debit side. Sales are shown on the credit side of the trial balance. Sales are income. Again, nominal account. Yes, on the credit side. So option B is not correct. All three other options are correct. Option B is not given to be correct. Now, the question number 10. Which of the following statement does not match? Which of the statement does not match? We need to answer it. Just look at the statements first of all. The wrong balance of accounts does not affect the trial balance. Definitely, if the wrong balances are there, they may impact the trial balance if it is one-sided or unequal, right? So option A is not correct. Option B, trial balance ensures arithmetic accuracy, correct. Debit balance of the ledger account is shown on the debit side of the trial balance, correct. And closing stock does not appear in the trial balance. Is it true? Yes. Closing stock generally does not appear in the trial balance unless if it is adjusted through the books, right? So it is not there. So definitely option A is going to be the correct answer. But because we were to answer that which of the following statement does not match. Okay. So option A is the correct answer. So that is all about this video and this lecture. I hope